Okay, wonderful. So we are starting our recording. Um, so welcome to our first live coaching marathon. My name is Vladimir Ribakov. I will present myself a little bit more for those of you who do not know me yet. Um, just before we start and we continue, a few things I do want to ask from you. First of all, I do want to ask your apologies if I make mistakes on English. That's not my mother language. You know that. You can hear that. So if I do make any mistake, don't get angry with me. The most important thing, you understand what I say. I do ask to judge me based on my forex things or trading things, and not by my English. That's first thing. Other thing, normally I ask to set cell phones on some quiet or some nice ringtone, but no need, right? You just can hear me, so you can do whatever you want with your cell phones. You have the okay. Um, about questions, okay? I have the chat in front of my eyes, okay, on the second screen. Um, so I would ask from you, friends, if possible, try to keep your questions after each subject. Okay, after each. Can you hear me better now? Steve Lanush, can you hear me better now? It's not. Yes. Okay, good. All right, wonderful. So as I said, for the questions, I do need you please to wait with them. Okay, I will stop after each subject, after each some 5, maybe 10 pages. Okay, and I will give you all the time to ask questions. Another thing I will ask from you is, please do not ask questions. Please do not ask questions that are not relevant for what we talked so far. Okay, so if I'm talking, for example, about kind of a divergence, please do not ask me on time frames or anything like that. I will go step by step and I will cover everything. Okay, after, well, every 40-45, depends on you, I will ask you minutes, we will have some break, 5-10 minutes break. Okay, so you can refill your energies. We're starting our live coaching marathon. For every marathon, what is the most important thing, as you know? To drink. Right, to drink, and to drink a lot. That's why if you still did not get your cup of coffee or glass of water or anything like that, please do. Okay, please do. And okay, and as I said, we will make some stops, some breaks, so we can refill energies. Okay, another and last thing I promise, and we begin, friends, please do not keep questions for yourself. Okay, please do not keep questions for yourself. If you have any, even if you think this is the most child question in the world, still please ask. Okay, I do want, after, when we finish today, I do want you to go out satisfied and know exactly what to do, why to do, what not to do, and how to do it. It's important for me, friends. I hate to be a lecturer. I hate it. I like conversation. Okay, that's why I will stop. I will ask you questions. Please also, uh, please go with me. Okay, when I ask question, some examples, some question about charts, please try. Okay, try. I need you to try. I need you to be involved. Okay, this way and only this way we can together reach our target, and that's all. Okay, Peter Jones, if you only can hear me and you don't see video, I think you will just need to re-log in again. Okay, re-sign in. Can you see my screen, friends? Everything is okay? You see the PDF, right? Okay, good. Just one question before we continue. How many, but please be honest, how many of you did read this PDF? Oh, wonderful. Okay, even if it's 50% of it, wonderful. Oh, wonderful. And thank you very much for the good word. I try to keep the language as simple as possible. Also for myself, so I can read the things I really want to say. Okay. Once again, friends, please, for those of you who cannot see the screen, please re-log in again. Okay? And maybe you can try another browser as well. I can see only one or two friends that have some difficulties with that. Okay? Thank you very much. Okay, so we are ready to start. Let's rock. And once again, friends, please do not try to jump forward. Okay? Much forward. I will stop. I will go step by step. And I promise you, at the end of today, you will understand the whole thing. Sell the rally, buy the valley. And first of all, as I said, nice to meet you. My name is Vladimir Ribakov. For those of you who don't know me yet, that's how I look like, by the way. Kind of Russian bear, right? Right now I'm working on myself to be thinner. That's how I used to work. That's from November, I think, last year. This November, I promise you, I will be much better. Much more muscles. Yeah, Marty, I know. Don't pay attention. Okay, that's all. Enough from my picture. I created the Forex Signals and Mentoring Club. Proudly staying there for more than a year now. We are doing very, very well. Well, I don't like to talk about that too much. Just can discuss with people that are there. Also, you can go for the blog. This is a blog I'm writing. That's how it looks like. Okay. Here I almost on daily basis I'm updating my market point of view, some trades, some important things I do want to share. During the last years, I developed several powerful trading tools like LST, as a restaurant rider, and Pips Carrier. I trade for a living and mentoring for biggest pleasure. I came online only because I missed that. I used to work for brokers. I used to work for hedge companies. Nothing of that can compare with being online with good people. Nothing. And doing that, and I really mean it, doing that, it's my biggest pleasure. That's everyone is doing something for his or her own soul. That's what I'm doing. The best thing ever happened to me was to see results from people that follow me, from traders that follow me, from my followers. When I get statements from my followers and I see their account growing, nothing could be better. Seriously, it's for me, and I still do not have children. For me, it's like saying, watching a child growing. It's amazing. My style of trading is mainly based on divergences. It means I'm looking for a situation when the market is deviating from the real price. Then I find my trading opportunities. As I always say to my followers, and I will tell it today not once, many times, divergences are not a strategy. It is a framework. Remember that? I apologize in advance if you will hear it, if you will hear me saying that too many times during the meeting. It's important to understand it. There are a lot of strategies you can build using this most powerful technical tool, the divergences. When I say divergences, I also mean convergences, but that's for later today. You must realize that in order better understand the price action and how the market really moves. When you understand the divergence wall, you understand the price action. And no, you cannot be right 100% of the times. Because sometimes there are news, sometimes there are speeches from important persons like Bernanke, for example, or Draghi these days. Okay? And sometimes there are unexpected things going worldwide, such as earthquakes or political things. Okay? It all affects, and when it happens, nothing is technical. That's why I say it's not 100%. Okay? Can you hear me well, friends? Yet? Ramon, I think the problem is only yours. And yes, that's exactly what I said. It's not 100%. It is not. Okay? Wonderful. One of most powerful tools in the world of divergences is the convergence. Or to be much more accurate, the most powerful tool is the combination of convergence and divergence. That's what we are doing here today. Okay? What you have on this PDF is the whole thing you need to know, you have to know about convergences. Before we go for convergences, we will first of all cover all the divergences thing. Okay? Just I want to say one thing. In order to trade the convergences, you do not need to know to trade the divergences, but you do need to know to spot them. Alright? Very, very important. Great. Any questions so far? Any questions so far? Before I continue about the things we discussed. Alright, wonderful. So let's continue. Sell the rally, buy the valley. Isn't that a great name? It's a bombastic name, right? I was thinking about the name, how probably to reach my point the best way, and that's the name that came up. The only reason why I looked for such a strong name is just because such a powerful and reliable technical tool needs to have a name that it will be that will represent it with great respect, and that's why I choose this name. Because, friends, divergences and convergences, these are the most reliable tools on the technical analysis world, and no, they are not 100% correct, but they are most reliable tools. You will understand later why. Alright, let's continue. As I said on the PDF, in this book we will learn everything. We will learn what convergences are. We will learn what and how to combine divergence and convergence together. And most important, we will learn the hidden ways of the real price action, the real markets. Okay? Just one thing before we continue. In this book you have the rules laid out for our strategies, the sell the rally and buy the valley, but they are absolutely no replacement for attending the marathon. It's very important to say that. Okay? Great. As I said here, even if you are newbie or rookie, do not worry. After today's, you will become a trader that armed with knowledge needed to succeed. I guarantee you that. And for that, just one last time, please do not keep things for yourself. Ask. If you are not sure about anything, please ask. Okay? Great. So take a cup of coffee or water and let's begin. That's our official beginning. Great. A convergence. The indicator, okay, itself represents the mass behind the price action. Okay, that's just in general. Convergence means that prices match indicator. Do not get confused. We will see everything on chart. Okay. In other words, the prices are the indicators exactly the same and lead us to the same conclusion and direction. Nothing like that. Okay. Just imagine the chart is saying one thing, the indicator is saying other thing. Okay. And all of them together lead us to the same point. When it happens, we are happy as we assume that this situation is going to continue. Okay? However, a convergence that's useful for us must come after a trend. If the market is ranging, and I will explain what does it mean ranging. Okay? Do not look for convergences in such situation. Here are a few examples of convergences. Okay, just I want you to see how it looks like. Okay, a bearish convergence. We have had a bullish move, which is, let me set a spotlight. Okay, we have had a bullish move, which is the first important thing for looking for a convergence. Then I do want to see a move. That's very important. As we said, on sideways you cannot use this tool. So we have had a move, then we have had a down move, the beginning of down move. See? But this time this down move created lower lows than the last low of the bullish move, this one. Okay? Do not worry, friends, we will go and explain step by step. That right now it's just a very general view. Okay, that's what we have here. That's a bearish convergence. The indicators on the same point will show exactly the same thing. Okay, lower lows on the chart, lower lows on the indicators. What indicators we will use? Okay. What indicator we will use, I will explain soon. Okay, that's in general how it looks like. That's another example for a bearish convergence after a bullish move. Now that's I picked up this, just a second, what's going on here? Okay, I picked up this example in purpose. I do want to explain you here what's a sideways move, what's not. Pay attention, friends. That's a market situation which I never look to trade. Never. Here, see that? Spikes, empty spikes, false breaks. Of course, I don't know it's going to happen, but when it happens here, I know it's not a situation I want to be in. But the whole picture is, you see that? It seems to be a sideways as well, right? It seems to be a sideways as well. But the range is big. From the top to the bottom, right? It takes the market few moves to make to reach it from the top to the bottom, from the bottom to the top, right? That's when the range is big. That's good, and you see good moves inside. That's good. But when the range is tight, leave it alone. Okay, great. And another example, as you can see, after a bullish move, okay, I have here lower lows, and on the indicator as well, here and here as well, you can see that. Okay, once again, friends, I do not want to go directly inside the indicators, what we should see. Why? Patience. Okay, patience. And the time frames, of course, everything we'll discuss later, step by step. Alright, so that's how it looks like. Okay, you can see here that after the bullish up move, the price has created a correction, and at the end of correction we can see that the low number 2 was lower than the last low number 1 of the bullish move. Right here, this is point number 1, this is point number 2. Number 2 is lower than number 1. That's the bearish convergence after a bullish move. Very, very important. Alright, okay, this is a convergence, and that's what we are looking for. When you have such situation, look for sell opportunities. Once again, friends, I want to go over the picture. Okay, when you recognize such situation, here we go. Okay, lower lows after a bullish move, look for sell opportunities. In other words, that's what we're doing here today. Sell the rally. You recognize lower lows, wait until the market will make a correction, which is a rally up during a bearish move, and then and only then look for sell opportunities. Do not look to buy, look to sell. Okay, of course, once again we will go over and over step by step. Promise you will understand everything. And just one thing, when we come to the end today, I will go here, which is live charts. Well, they are not live because it's Saturday, but we are going to build plans for the upcoming week based on what we will learn today. Okay, based on what we will learn today. Wonderful. As I said, please do not try to skip the levels. Learn and try to learn immediately how to trade it. First, learn to recognize the conditions correct. Okay. All right. So now we understand how the bearish convergence looks like. Correct? Now we understand how bearish convergence looks like. Now let's learn how a bullish convergence looks like. Here we go. Okay? We have a bearish move. After a bearish move, what did we get? Higher highs. Point number 2 is higher than point number 1. The first time during the whole down move, you see that? The first time during the whole down move. This is the first time when we get higher highs. Okay? And on the indicator, and we will learn soon what indicators we use, that's what we can see. Also, higher highs. Okay? Wonderful. Let's continue. And this is just the explanation I just explained. Okay, here is another example for bullish convergence. A downtrend, okay, and higher highs. Okay, higher highs. The indicator can see exactly the same. Okay, wonderful. That's how bullish convergence looks like. Let me just see some questions here. Abbas, I will explain in a minute the importance of the indicators, okay? Step by step. Friends, once again, please do not jump for things I didn't explain yet, okay? Okay? Second. And as I asked, I will make stops. I will give you time for questions. The chat is just jumping into my eyes, and please be patient. Okay? About the first example, there was a question. Where was the, what is the question here? The previous one has higher highs. The previous one has higher highs. Which one? No. Ah, this one? No. That's not correct. And I will explain later why. Okay? I'll explain later why. Okay? Okay, that's the same question also from Jenny and Halim Misor. Good. Let's continue. About your question, Marty, yes. And Victor asked a good question. Are there any rules how we can identify trend versus a range? Only your eyes. Would you call this trend here? The answer is no. I can guarantee that for everyone. No. Would you call this a big range where there are moves? Yes. You can see just with your eyes there are few waves. Up, down, up, down, up, right? Few waves. And the waves are actually moves. You can see that. Okay? Just with the eyes. But one thing I can tell you, if there is any doubt, leave it alone. It must be clear. And if you have any doubt, just leave it alone. Okay, wonderful. We'll discuss about it, Peter, how steep the convergence line should be. We'll discuss about it later. Okay. And Dave asks, that's a good question. Vlad, is there any way to identify the correct higher high or lower low? Yes, we will discuss about that. I promise later. And this is my another chance to ask you, friends, patience. I promise we will go step by step and cover everything. Okay? I know you want to quickly understand everything, I know, but it's impossible to skip steps. Okay? At the end of today you will understand exactly why. Great. So now we know how a bearish divergence looks like, how a bullish convergence, my mistake. How a bearish convergence and a bullish convergence look like. Right? These were our examples. Okay? Let's summarize so far. Find a trend. Our first thing is find a move. If there is a doubt, leave it alone. But remember, convergence must come at the end of a trend, not on very ranging market. Okay? Identified bearish or bullish. Bullish convergence comes at the end of a downtrend. Bearish convergence, though, comes at the end of a bullish trend. Okay? For bearish convergence, we are looking for, as I said, an uptrend and then lower lows. How correctly spot them we will learn. Do not worry. Okay? The bearish correction should create a low that will be lower than the last low of the bullish move. When you spot the bullish move, okay, try to spot its last low. Okay, its last low. Then, after the correction at the end of a bullish move, see if the low that is created at the end of this correction is lower than the last low of this bullish trend. Okay, if it is, that's how it should look like. That's how. That's bearish convergence. What we'll be looking to do here? Sell rallies. Every rally we'll be looking to sell, but that's a little bit later. Okay? That's how bullish convergence looks like. We are looking for a downtrend first of all, then a bullish correction, and at the end of the correction we are looking for a high that will be higher than the last high of the downtrend, right? Like that. Any questions so far? Any questions so far? And once again, friends, please ask relevant questions about the things we already learned, not the things we will learn. Alright, wonderful. No questions means it's pretty clear. I hope so. Friends, again, if you have any questions, even if you think that most irrelevant question, still ask, please. The worst case, I will tell you, we will cover it later. Okay? Great. So that's all for the first step. Okay? On the break we will have soon, please, if you can, take 1 minute, 2 minutes, 3 minutes and go over the chart. Just try to spot the convergences. Just try to find them. Okay. Chen has a question. Can we say that it is like we spot the market turning point? Kind of. Not always, but kind of. I will talk about that later. About the time frames, I promise we will discuss about that later. I promise. Okay? Just I will tell you right now, it can work everywhere. Some preferences, we will discuss about that later. Good. So we are done with the first step. We know how a bearish divergence and a convergence. I confused the word. Sorry. A bearish convergence and bullish convergence look like. Okay. Now let's continue and learn what indicators we will use with convergences. Okay. The first and the most reliable indicator to identify a convergence is MACD. Simply because MACD means moving average, convergence and divergence. And we are looking for convergences, so MACD is the best tool for us. Okay? Remember, the MACD has two important things: the moving average and the histogram. The moving average and histogram, which is a distance between the moving average on any point. That's how it looks like. Okay, that's the moving average. You can see that. That's the histogram, and that's the difference between the moving average on any point, on any moment. Okay, the bigger the distance between the moving average, the bigger the histogram is. Normally, I have been asked why the MACD is the best tool. Why really it is the best tool? Well, for the forex market mainly, you know that we cannot measure exact volume. It's just impossible, and the volumes indicator we have, it's nothing. Okay? Only reason, because forex market is global. It's not like NYSE, right? It's global. It's not physical market anywhere, everywhere. It's global. That's why you cannot measure real volumes. The only way to do it is comparing the price action right now with the price action few candles before. And that's what MACD does. The difference, the distance, the difference between two moving averages on any point. Okay? And that's what gives us the closest approach to the volumes in the forex market mainly. Okay? That's why for me MACD is most reliable indicator. I know for some of you the built-in MACD is with one moving average and histogram, and it looks completely different, right? So do not worry, friends. First of all, you can get it on for those of you who are on the club. You can get it in the members area. For those of you who are not, I will upload it to the blog, and you can download it from the blog for free, of course. Okay, and you can use that. Wonderful. The next indicator we can use, okay, are RSI, stochastic, momentum, CCI, volume if you trade stocks and indices not for forex, and force indicator if you trade stocks and indices and not for forex. Okay, but Jason, the answer is yes. So the most important indicator for us will be moving average, and mainly the histogram. Okay, mainly the histogram. Before I continue, any questions, friends? Let's see. Pana, that's a good question. In case MACD does show a convergence, but RSI does not, is that good enough or not? Yes. MACD alone is enough. MACD alone is enough. Okay? Good. The next question. Rafael asks, do you mean the distance between the red and the blue line? Yes. The histogram is the distance between the blue and the red moving average. Right? By the way, to make it simple, when the blue moving average is above the red, the histogram always will be green, positive. When the red will be above the blue, it will be the opposite. Okay, negative, below the zero. Can you see that this line, friends? This is called the zero line. Okay? That's what separate negative and positive, negative and positive. Okay. To make it simple, you have just colors: green, positive; red, negative. Okay. Great. Let's see where I stopped. No, MACD alone is enough. All the other indicators you have here on the list are just extras. MACD alone is enough. To make it probably the clear as possible, I use only MACD. Okay, you will never find me using stochastic for convergence. No need. They are possible for extras. Okay, I do not use them. Great. Peter asks, okay, Peter, I replied to your question about the one moving average already. Okay. Dave asked a good question. What about the awesome oscillator? Dave, awesome oscillator is part of MACD, so it's good enough. But MACD is most important indicator. Okay. And Martin asks a very, very, very important question, probably for all of us. Does this technical method gives enough trade opportunities? The answer is much more than enough. I guarantee you, you will not be able even to follow all of them. You will see. Okay. Yes, to be clear, I focus on histogram rather than on moving average. True. Wonderful. The answer is yes, Judy. Yes, I use the default settings for MACD. And the question, that's a good question, Victor. Do I care about the relation of a moving average to the zero line? No. No. I know some traders do. No, I don't. I do not. Okay. Great. So we are ready to continue, right? We're ready to continue. I want to ask you: do you feel like you need some break already, or we can continue? No, right? Okay, wonderful. Let's go. Great. Pana, it's only you. Only Pana wants 10 minutes break. No, we will continue a little bit, okay? We'll continue. When you feel tired, please let me know. Okay? Or if you see I'm starting to speak Russian, then stop me. Then I need a break. Okay? No, just kidding, just kidding. All right. Well, I know some of you will understand Russian. That's true. Okay. Um, okay, so now we know what indicators we use. So far, what do we have on our arsenal? We have bearish convergence, we know how to spot it. We know bullish convergence and how to spot them. We have the indicators on our list, which is most important, of course, is the MACD, and we're ready to continue. Okay, remember, we will sell the rallies, buy the valleys. So the next things we need to learn are how we enter the trades. We have the basics right now, right? Now we need to know how we enter the trades. Well, it's very easy, actually. So let's make it simple and put all the cards on the table. Combination. That's what we will look for. Combination. What do I mean by combination? We will find a convergence. We will find a convergence on any time frame. Then we will look for correction. Okay? Then we go we look for trades to the same direction as the convergence. If the convergence is bearish, we look to sell. If the convergence is bullish, we look to buy. And we look for these opportunities on 1 to 2 time frames lower. Do not get scared, do not get confused. We will cover everything. Okay? You look for trades based on divergences on the same direction as our bigger time frame convergence. Okay? For that, we will learn today the basics for divergences step by step. Okay? And once again, as I said, in order to trade, sell the rally and buy the valley, you do not have to be a master of divergences. No, that's not the goal. But you do need to spot them, just to spot them, and you will understand very soon why. Okay? Let's see some example. In this example, we find a convergence. Let me set a spotlight. Okay, we find a convergence. Right? We had a down move, then higher highs, and we have had a higher highs on the histogram as well. Right? Now, what's the next step? As we said, we are looking for correction. Right? This is the second step. Look for correction. In our example, for a down move, we have a bullish correction, convergence. We have a bullish convergence. So, what we are looking to do? To buy. That's our direction. Bullish convergence. We are looking to buy. Right? So we are looking for any down move, which I call a valley. Okay, a valley. I do want the prices to push down. Here the correction happened. Go for 1 to 2 time frames lower to find buy opportunities. Look for bullish divergences on 1 to 2 time frames lower. Once again, why bullish divergences? Because our convergence on the higher time frame is bullish, and we'll look for buy opportunities. Okay? Remember this sentence, friend. It's probably the most important thing. You must find a divergence first of all before going for the next step. If there is a correction and no divergence, you don't even need to go for another step. That's why before we go for another step, we must find the divergence, any kind of divergence, and you will see that soon. Okay. All right. And we went for lower time frame, and a bullish divergence appeared. So this bullish divergence is going hand by hand with our longer time frame bullish convergence. Okay, so once again I want to go step by step. What did we do here? Number one, we find a convergence, right? We found a convergence. We find our bullish convergence. Number two, we are looking for a correction. We are looking for buy opportunities after correction down, right? We are looking for correction. Here it happened. Then we go for 1 to 2 time frame lower, and we look for bullish divergence. Here we go. Just for example, when we get the bullish divergence, we are looking to enter. How? When? We will learn that. Right now it's general, step by step, to know and to understand what to do. So once again, number one, find the convergence. Number two, look for the correction. Number three, go for lower time frames and look for a divergence to the same direction. And right now we will have 10 minutes break. Okay, 10 minutes break. After the break, we will go and learn the divergences. Okay, we will learn the divergences. All the things, all the basics, all the main and the most important things you have to know, okay, in order to know how to trade it, the full picture. Okay, so 10 minutes break, friends, and we continue. Continues the recording. Alright, so we have the basics for the convergences, right? We have the basics for the convergences, but we said we have to combine it with divergences on lower time frames. Right now we are going to cover the basics for divergences. This is something you do not have on your PDF. It's different. That's why I said you have to attend the webinar, the marathon. Okay, reading only the book is not enough, because we cover here things you do not have there. Alright, as again, step by step, I will stop after each topic and you can ask questions. Okay, and just last thing, friends, I know, and I'm familiar with that feeling, that it could be confusing. Okay, if you feel confused right now, it's wonderful, because from here we can only simplify things. Okay, if you will feel confused after the divergences, comparing to convergences, it's wonderful, because on the last step we will put all the things together. So right now we have a big puzzle. Okay, we have a big puzzle, big picture, and we will use a glue right, just to put it together step by step, part close to part. And as I promised, at the end we will go directly to the charts and we will get ready for the upcoming week, and we will look for our trading opportunities. So let's continue. What is a divergence? A divergence is a situation when the market, which is the chart, says one thing and the indicator, which represents the real price action of the chart, says exactly the opposite thing. In other words, we can say that the market is lying to us, and the direction would probably end soon. Okay? Divergence is a simple story of demands and supplies for any financial asset. That's just an example for many kinds of divergences you can see on the chart. Okay, just an example. You can see that you can find here regular, continuing, hidden, whatever you want. Okay, we will learn that right now. So, patience. The importance of the divergence. There is always a reason for price action. The price action happens because of differences between the demand and the supply on any moment. The bigger the deviation is, the bigger the probability for the direction to change. When you understand the divergences, you understand the real price action. And then your trading becomes much more natural because you understand exactly what the market does, and not just that, you understand why the market does that. You will see that. Okay? Wonderful. Why is it? It belongs to the most reliable technical tools. As we said, divergence is the view of demands and the supplies for any financial asset on any moment. When there is a big deviation, the market will naturally fix it. Okay? Naturally fix it. There are many ways to trade them, and today, okay, we are here. I want to go and cover the background for the divergences. Okay, let's go for the most popular divergences types, and we'll learn how to identify them. Okay. By the way, divergence could be shown on the same indicators as the convergence. MACD is the number one, the most important tool. All the rest are extras. MACD is most important tool. Okay? Good. For regular divergence, I do want you to know these two things: PNP and NPN. PNP and NPN. What does it mean? PNP equals positive, negative, positive. We'll see it in a minute. NPN equals negative, positive, negative. Okay? Just remember that. We will see it in a minute. That's our classes for the regular divergence. Okay? That would be the prices. That would be the indicators. Okay? On the top, prices. On the bottom, indicator. Class A is when the prices are going up. Okay? But on the indicators, and we can see on the prices, higher highs. So that higher highs. But on the indicator, we can see lower highs. Okay, that's bearish divergence. Why it's bearish? Because the indicator hints me that the move is probably will be bearish from here on, right? Probably. What's a bullish divergence? How bullish divergence looks like? A downtrend, lower lows, and higher lows on the indicator. Remember it this way, also for divergences, also for convergences. The indicator is the one that gives you the probably the next direction for the market. The indicator gives you the direction, the potential next direction to the market. Okay? Remember that. Class B would be when on the prices we can see double top or double bottom, okay, and the indicators show exactly the same as on class A. You can see double top on the prices and lower highs on the indicator. It means the market is expected to be bearish soon. Okay, same here. After the end of the downtrend, okay, we have a double bottom and higher lows here on the indicator, which means that's bullish divergence. Why bullish? Because I expect a bullish move after that. And class C would be the opposite B when the prices are going up and creating higher highs, but on the indicator I can see double top or lower lows at the end of a downtrend, lower lows, but on the indicator I can see double bottom. Class C is rare. It does not happen often. Okay? Class A is the famous one. Class C happens very rare. Okay? Any question so far? Do I upload this PDF? No. That's why we have the video and the marathon. Yes, this is a regular divergence. Okay? This is a regular divergence. Okay? Wonderful. Let's take a look on examples. Okay, let's take a look on examples. Okay, here we go. Let me just make the spotlight. Here we go. Okay, here we go. That's Eurodollar daily chart, just for example, an up move, and we have higher highs, and then we are looking for the indicator, and we can see, okay, lower highs. You see, it means the prices lie to us. The market is expected to change direction from here. Okay, good. We can find it, by the way, the regular divergence, and that's important to say. Regular divergence is the only kind of divergences where you can use the moving average. Regular divergence is the only kind of divergences where you can use the moving average of the MACD. For all other divergences, you do not need the moving average, you need the histogram. Regular could be seen on MACD and MACD moving average and histogram. The most powerful is when it happens together. That's most powerful. And as I said, you can see the divergence also on RSI, also on stochastic, and on other indicators as well. The one we really need is this one. Okay? In other words, when there is a divergence on RSI but not on MACD, it's not good enough for me. MACD is a must. Okay? Great, let's continue. That's another example. Here we go. Okay, a down move. Okay, and we can see, by the way, what class is that, friends? A, B, or C? What class is that? What do you think? A, B, or C? A, B, C. Oh, we have all It's N? Halismore? I don't know what's class N. Oh, just a mistake. It's B. Well, most of you said B, and the answer is B. Correct? Correct, exactly. Okay? Double bottom on the prices, right? And higher lows on the indicator. That's class B. If you don't believe me, okay, here we go. Okay. Wonderful. Okay. Any questions, friends, so far about regular divergence? Once again, as I said, that's important. You do not need to understand how to trade it, because remember, sell the rally and buy the valley are all about convergences. A divergence is a combination tool. Okay? Remember that. That's why for divergences we learn the basics. That's what you really need, just to know how to spot a divergence. That's all. Okay? That's a wonderful question, Josette. Is A, B, or C most powerful? Yes. A is treated as the most powerful divergence. Okay? But does it mean we will not use B or C? No. No, we will use them. I use them. They all great. Statistically, A is more powerful. Okay? But for convergences, we use all. Alright? That's what you need to important. For sell the rally or buy the valley, we will use all. Alright, let's continue, friends. By the way, remember we discussed about PNP and NPN? That's what I mean. Pay attention. Okay? Take a look on the indicator. Okay? N negative, P positive, N negative. That's NPN. Okay? And that's one. What is that? That's PNP. Positive, negative, positive. Just 3 letters to make it easier to remember. Okay? PNP, NPN. Just to make it easy to remember. Okay? That's what it is. Okay? On the histogram. Again, here. See that? See? Take a look on the low of the histogram. Negative, positive, negative. Okay? On the divergence you have negative, positive, negative spots on the MACD histogram. And of course, here is the opposite, right? PNP, positive, negative, positive. On this divergence I have positive, negative, positive. Positive, negative, positive. Just to make it simpler. Great, now let's continue for the continuing divergence. Okay? For regular divergence we used PNP and NPN, right? Here we will look for all positive or negative on the histogram. Okay? It does not matter nothing for what we learned today. Just the differences. That's what you need to understand. Pay attention, friends. You see what I mean? Here, the prices are moving up. See that? Higher highs. But look what happened with the histogram. It just continues and continues and continues to create lower highs, and all the highs are above the zero line. All the highs are above the zero line. See that? That's continuing. Why does it, why is the name is continuing? Because it continues longer than any other divergence. Okay. By the way, these are very, very powerful divergences for big market retraces. Just an extra. Okay, the more it continues, the bigger the retrace will be. That's something you have to remember. Okay, good. That's how it looks like. Just for another example, a regular divergence that continues more than two lows turn to be continuing. That's just the method. You see that? For example, like here, it doesn't matter anything. It doesn't matter anything for you, friends. It doesn't matter anything. Just the basics. Okay, here we go. It used to be regular here, then it continues lower and lower. See? Just continues longer than any regular divergence. That's all. Okay? Remember that. And now I have a question for you. Pay attention for this, friends. Here. Okay? What kind of divergence is that? It's continuing or regular? Here. Okay. It's continuing or regular? No, not class, not ABC. No. Just continuing or regular. Okay, I can see it's 50-50. What did we say, friends? Continuing divergence is when the histogram is all positive or all negative. In other words, when we do not have NPN or PNP, right? Do we have any NPN here? No. It's all negative, correct? Here, it's all negative. See that? All negative, all below the zero line. All below the zero line, correct? Okay? It means it is continuing, right? It means it is continuing. And here, let's take it another example. Here, what is this? Right? Wonderful. No one say continuing. It is exactly regular. Ah, Rafael, you were the only one. It is regular, friends. Why? Pay attention. P positive, then negative, then positive. Okay? It's regular. Does it matter anything for your trading? No. Just so you feel good with yourself that you spot the things correct, that's what it is. Okay? And last test. What is this? Regular or continuing? Continuing. Wonderful. And this time it's 100% correct. Everyone said continuing. Wonderful. You see? Which makes me say right now, friends, the more you see, the better you understand. Please do not be lazy. On the breaks or when we finish, go to the charts. Try to spot them. Okay? Try to feel them. Try to see the differences. It will be just for your confidence. When you see things and you understand how to spot them, it's much easier for you to feel more comfortable. Okay? With your analysis, with your expectations, with your prediction. Okay? It's very important. Thank you, friends. Okay? Great. Um, that's a wonderful question. For continuing divergences, do we have classes A, B, or C? No. And that's a wonderful question. The classes are for regular. Okay? Great. Wonderful. Hello, Christo. Welcome. Okay, so let's continue, friends. Here you can see just more example, okay, for continuing divergence. Okay. For some of you these days, for Aussie franc, this is the pair. You see that? These days with the Aussie franc, look familiar, right? Look familiar. Great. Continuing divergence. Powerful continuing divergence. Okay, let's continue, friends. The next type we have is hidden. Okay, hidden divergence. Okay. Okay, just go back for this picture. Remember what we said, friends? Regular divergence that continues more than two highs or lows turn to be continuing. Right? Continuing divergence is from the word continues. Yes, we do have P and P. Yes, P and P. Yes, but it continues much more than two highs. Right? That's all. The continuing is from the word continues. Okay? It continues more than it should. That's why it's continuing. That's all. Okay? That's all. You see here? That's how it started. It starts continuing, right? It starts continuing. Then we got some bearish visit here. Then continued a little bit more. Right? Then continued a little bit more. And what starts continuing continues, ends continuing. That's all. It really doesn't matter, friends. Do not confuse yourself. Okay? Do not confuse yourself. Okay? It doesn't really matter. That's what it's important to understand. Wonderful, friends. Wonderful. Sorry. The next thing is hidden divergence. We have two more: hidden and extreme. Hidden and extreme. Okay, and then we finish. We cover all our divergences world. Okay, divergences types. Okay, good. Let's continue. Hidden divergence. This is, for some reasons, the most complicated for traders to remember or to understand. So I will try to do it simple. Okay, what is the normal kind of the divergences is to look for when the trend is going to end, right? To find the reversal point. That's what it is, right? We're looking for extreme points, right? Closer to the edge. We're looking for reversals. Hidden divergence is a divergence which means go with the trend. Go with the trend. And let's make it simple. How do we spot a bullish trend? How do we spot a bullish trend? When the lows are going high, right? When the lows are going high, it is bullish, right? Like, just try to understand. Try to imagine. Sorry, when you are climbing steps, what are you doing? Right? You're going higher and higher and higher, step after step after step after step. Every low point of the step is higher than the previous low, right? You are climbing. Climbing is the correct word, by the way, in English. Climbing, that's correct. Yes? Ooh, nice. Good, thank you. So when you're climbing the steps, okay, the steps are higher than the previous step, always, right? That's what the uptrend is doing. Step, 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 step. Okay, that's how you know that you are going up. Okay, of course the same, just opposite for when you go down, but we will see that in a minute. Okay, so what we are looking for on the chart for the hidden divergence is first of all to identify a bullish trend, and we are doing that by higher lows. And on the indicator we want to see the opposite, exactly the opposite. If here we have had higher lows, here we want to see lower lows. That's all. For divergences we always look the chart to show exactly the opposite than the indicator, right? To have contraversions. Okay, that's a bullish hidden divergence. From here I expect the prices to push higher. Okay, wonderful. And let's take a look on a bearish hidden divergence. As I start to use this metaphor, so we are going down on steps, right? Down, down, step by step. This is a downtrend. We are moving down. Okay, that's how I identify downtrend. Lower highs, lower highs. When I have lower highs, I have my bearish divergence, downtrend. Sorry, forget the bearish divergence. Sorry, it's just a mistake. I have a downtrend. Okay, on the indicator, I will see exactly the opposite. Higher highs. Right? When it happens, I know I have a bearish hidden divergence. I know I have a bearish hidden divergence. Okay? Let's take a look on the chart. Okay? What do we have here, friends? What is that? A bullish, an uptrend, right? A bullish trend, uptrend. All my lows are going higher and higher and higher. Correct? By the way, I didn't mention that yet. I will now. The indicators we use for hidden divergence are two indicators. Two. And I want a combination. MACD histogram and stochastic. MACD histogram and stochastic. Okay? For MACD I always use default. For stochastic I use 833. The default is 533, so the difference actually is minor. Okay, it's not so important, but still it's 833, the parameters. Okay, both. That's most reliable. Why both? Well, that's a good question, because they are saying different things. They are saying different things. Stochastic is much more volatile than the MACD, and in order to understand that the trend is going to continue, I want the more volatile indicator and the less volatile indicator to say exactly the same. It means for me that the prices reach this point where they expected really to continue the trend. The combination of both of them together is very important. That's a wonderful question. Okay, so once again, I have a trend. I have I have higher lows on the chart, and I have lower lows, just the opposite, on the indicators. Right? From here, I expect it to go higher. Okay, great. Let's see another example. Okay, another example. Here we go. That's a bearish trend. I have lower highs. Okay, and I have here a bearish hidden divergence. The stochastic as well. See that? Here we go. That's an example. Here's another example. Okay. Here's another example. Okay. A bearish trend, lower highs, and on the indicator we see exactly the opposite, higher highs. I expect the trend to continue. Okay, and of course we can see that on stochastic it happens as well. Okay, wonderful. Questions time. Questions time. Just I want to repeat. Yes, for hidden divergence I'm looking for combination MACD and stochastic. MACD and stochastic. Andrei, please write me private after that, okay? By email. Wonderful. Let's see some questions here. Ooh. Let's see. Where are the questions? Josette asked a good question. How do I know if it's hidden or regular? They are completely different. Completely different. Regular is against the trend, hidden is with the trend. Okay? It's important. Pillai asks, yes. MACD histogram and stochastic is the combination we need. Okay? Is the combination we need. Combination of both of them is most powerful, and that's what you need to look for. Okay. Peter asks, why did you expect prices to go higher when the indicator said lower on hidden? I don't like normally go inside the mass. I will just explain it. Remember what we said, friends? What is the divergence? It's a situation that shows the difference of the demand and the supplies on any moment, right? Let me just try to I will try to write something here. Okay, that's what the chart does, and that's what the indicator does, right? 1, 2. Pay attention. This is a bullish trend. Okay, but pay attention what happened on this correction. Here, on this correction, pay attention what happened, friends. Okay, it was only a correction down. Only a correction down. But see what happened with the indicator. It went lower than the previous low. How come? If this move was so small, how come the indicators goes much lower? That's what I call supplies and demands. We can see here the traders, right? The big traders, the real traders, the numbers that move the market. Okay, what did they do? They reduced it down with much more money, and they created big difference between the demand and the supplies. On these points, they show us their demand for this currency. Okay, for this currency is much bigger. From here, they took the indicator, right? They took the prices so low, the volumes so low, that they are ready to jump in with full power. Okay, they are ready to jump in with full power. They are reducing the volumes to the bottom, so they can push all in, what I call, right? All in, and they can take the prices from here much higher. That's how it works. Only the differences between the demand and the supplies. They take the volumes down here, okay, and the prices make only small correction, and then they say, okay, right? the mass is very, very low. So let's push it. Okay, I hope I hope my English was good enough to explain it. I hope my English is good enough to explain that, and you understand what I mean by these numbers. Okay, that's how it works. That's how it works. Let's see more questions. More questions there. And the stochastic is price action to enter. No, the how to enter we will learn later. Okay, we will learn later. What I do want you now is to understand what and how to spot the hidden divergences. Any questions more so far, friends? We have only one divergence to cover. Any questions so far about hidden or regular or continuing? Just want to repeat one more time. It doesn't matter. It doesn't change your trading with convergences. You just need to understand how to spot a divergence. Okay? But I do want you to understand the differences. No, it will come. It will come, Christian. Yes, if there is no combination dev, I don't take the trade. Exactly. MACD with stochastic together. Okay. Marcelo asks, what type of divergences can exist at the same time? None. On the same time frame? None. Only one. You can find combination of divergences on one time frame and another time frame, but on any specific time frame there is only one divergence at a specific point. At specific point. Can you say you have a bullish trend and a bearish trend at the same time? No, right? So the same with divergences. Okay? Wonderful. So let's go for our last divergence type, and that would be the extreme divergence. I can guarantee you right now, friends, that most likely this will be the last time you see this extreme divergence, because it happens so rare together with convergences that it's almost impossible to find it. It could be one of 1,000 times or something like that. I don't know, but it's very rare. But still, I do want you to know what it is. This is the most simple divergence from all we learn. This is the most simple, I promise you. Okay, this is a divergence, which means there was too much money involved suddenly on some pair. It can happen because of many reasons. Okay, but there are two things we need to remember. When they happen, we do not trust and we do not use the extreme divergence. And these things are a bank intervention, when any bank intervene into the currency pairs, or some unexpected things happen on the world, like the earthquake happened on 2011 in Japan. Okay, then nothing technical could work. Then just leave it alone. Okay, to recognize this divergence, we will need RSI and MACD histogram. Okay, for RSI we will be looking for 80 and 20 levels. 80 and 20. The default are 70 and 30. We will use 80 and 20. Okay? Now pay attention. What I do want to happen on the chart is like that. By the way, to be completely honest, this is a situation of a bank intervention. Okay? So normally you don't register it. I just want to show you how it looks like, so you understand what I'm talking about. Okay? That would happen with bank intervention. But still, I do want to show you how the divergence looks like. Okay? Pay attention. MACD histogram created new high. You see that? Here, the histogram. Comparing to at least 5 last highs. 1, 2, 3, 4, 5, 6. This high is higher than the last 6 highs. We need at least 5. And on the same point, RSI should come to extreme. Extreme means 80 or higher. 79 is also okay. Alright? Extreme from the bottom means 20 or lower. 21 is also okay. Okay? That's the combination. Very simple. What should I expect from here? Too much money was involved on this bullish move. What can I expect? A retrace. Right? That's all. Let's see another example. Here we go. It's gold. It's gold. Okay? See that? This high was higher than 1, 2, 3, 4, 5 last highs. Right? And RSI above 80. What do I expect? I expect for retrace. Bam, happened. Then another time, see that? Another high, another spot here. See? With RSI of 80. Another time and bam, even bigger move happened. That's extreme. And no, here nothing happened. No bank intervention, nothing on the world unexpected like earthquake. It just created extreme. Okay? Just created extreme. It's a pretty rare situation. It's pretty rare situation, and this kind of divergence is not reliable on small time frames. I mean 5 minutes, 15 minutes, it's not reliable. Okay? Yes, it's 4 hours, you know what, also not 1 hour. For this kind of divergence, you want to have 4 hour and higher, 4 hour and higher. All other divergences are wonderful for all time frames, but this one is for 4 hour and higher. Because during the day, there are so much noises, right, which could create fake extremes. So that's why don't trust these divergence on very, very small time frames. The intraday stuff, go with the medium and the long terms, 4 and higher. Very rare, very reliable. Okay. Yes, exactly. That was a question. Is this low, or this low, right? Is another extreme? The answer is no. It's not extreme. Okay. What happened to my mouse? It stopped moving. Just a second. Huh? What's going on? Okay, probably the battery is off. Just a second, friends. Okay, I switch the battery here. Just a second. Can you hear me, friend? I don't know what's going on. Just stopped working. So weird. And another battery does not help. Okay. Wow. What's going on here? Just a second. We'll find a solution. It's forex virus. Yes. Right. A second. So weird. Seems working, but it's not moving. You know what, friends? We finished with the divergences. Take the break, okay? Take the break. 10 minutes. Okay, 10 minutes, and I'll try to figure out what's going on here. Okay, 10 minutes, and we continue. Sorry. Ah, you say it's moving now. You see, Murphy rules. But anyway, take the break we discussed. Okay, break, and we continue. Okay. So that's the divergences we have. Okay. Now we have all the basics for our sell the rallies, buy the valleys. We have everything we know, everything we need we have right now, or in our arsenal, right? We are ready to go. The next 2 hours are most important, and yeah, as Pana says, yes, that's where the party begins. Yes. Okay. Now it's time to learn and go to charts. Learn and go to charts. Learn and go to charts and make and at the end, as I promised, we will go and we will build a plan for some pairs for upcoming week. Okay. Let's start. So how to enter the trade? The first thing we are looking for, remember what it is? We are looking for a trend. Then we find a convergence and we identify it, bearish or bullish. If it's bearish, we are looking for sell opportunities, sell the rally. If it's bullish, we are looking to buy the valley, we are looking to buy for buy opportunities. Okay, good. We are not waiting for a candle, we are not waiting for any special confirmations, but we do attack support and resistances, and I will explain. Okay, so let's go directly for examples. Our first step is we find a convergence, right? We find the convergence. Here we go. We have a downtrend move, and then we have a bullish convergence. Just a second, let me use the spotlight. Here we go. Okay, downtrend and higher highs on the chart, higher highs on the indicator, bullish convergence. What I'll be looking to do? I'll be looking for buy opportunities. I will looking to buy. When? After correction. What do I do now? I go, right? I go for lower time frame. And by the way, remember when we discussed about that, I write you can use 1 to 2 time frames lower. I never go for 2 times lower to spot an entry. That's what I mean, to spot an entry. Okay, I am working on 1 time frame lower, same time frame on 1 time frame lower. Okay, I find the convergence and I go for 1 time frame lower. You can go for 2, no need, and you will see that. Okay, I stopped doing it because I saw the 1 hour is the same opportunities. Everything is okay, yet just no need to go so lower to find some entry. I'm using the same time frame on 1 time frame lower, not 2. Okay, so we find a bullish convergence on previous chart, right? It was dollar Canadian 4-hour chart, as you can see, dollar Canadian 4-hour chart, a bullish convergence. Then we go for the 1 hour time frame. Okay, and what I will be looking here, I will be looking for a correction, and at the end of the correction I'll be looking for a bullish divergence. I'll be looking for a bullish divergence, right? Wonderful. That's my 1 hour time frame. What do I have here, friends? Okay, I have higher lows, sorry, on the chart. And what do I have here? I have lower lows on the indicator, histogram and stochastic. What is that? That's bullish hidden divergence. Bullish hidden divergence. Okay, so I am ready to look for buy opportunities here right now. How do I do that? Okay, for that I need support. Once you spot your divergence, you set 3 closest supports and resistances. 3 closest supports and resistances. Okay, in our case, let's take a look on examples. Okay, that's the same dollar Canadian 1 hour chart. Pay attention on here, friends. What do we have here? Okay, the hidden divergence already started here, correct? Here, hidden divergence already started here. So that's my, I spot the divergence. The divergence is there. Then and only then I am drawing 3 support. By the way, why support? Why support? Because I'm looking to buy, right? I need some levels to support me, right? That's why support. So that's my first, because I already spotted divergence here, right? That's my second support, and that's my third support. Okay, that's my third support here. That's the 3 closest relevant support for this specific situation. Now I know where is the biggest problems normally for traders. How to spot support and resistances correct, right? I'll give you 2 notes that will help you. First, they should not be too close to each other. What do I mean? If you trade, for example, the 1 hour chart, okay, visually they should have some distance between them. If they are very, very close, let's go for a live chart, and I'll show you some examples. Let's take what's that? That's Aussie dollar, for example. Okay, I can set a support here and here, right? Here and here, but this is too close. Too close. They should not be too close to each other. First rule. Okay, because this is the same support, just a little bit different. this is the next support you can rely on. Okay, and that could be, for example, the next support you can rely on. Okay, but not too close. Horizontally. Why vertically? Horizontally. Okay. Visually, you should see that there is distance between them, not too close. Again, if you try the daily chart, again, okay, you can set, let's say this is a resistance, then I can take the next resistance here, and the next one is here. It's too close. Okay, and that's a good question. How many pips should be between them? I don't believe it. Visually, you agree with me, friends? I'll ask you this way. You agree with me that this is too close? Correct? This is too close on this specific chart, on this specific situation, right? Okay, but this is distance. It doesn't matter how many pips. It doesn't matter. On some market conditions could be 15 pips, on some market conditions could be 50 pips. It doesn't matter, just visually. That's why I always say, use your eyes. It's not all robotical, right? It's use your eyes. Trust your eyes. Okay? The second thing would be, this is the first thing, your support and resistances should be a little bit, well, with distance. Okay? With distance. Okay? The next thing is, the more spots you have on the support, the more reliable it is. Okay, in our example here, okay, in our example, okay, on the first support, you see here, on the first support, we have 1, 2, 3, 4 spots, right? And if I continue the line, I would have here also support. On the second spot, I have here 3 spikes, and here 4 spikes. Wonderful. On the third support, I have here and here and here and here. Okay, the more spots you have, the more reliable it is. You can use tails, you can use close price, all counts. The more spots, the better. Tails or close price, doesn't matter. The more spots, the more reliable it is. Okay, you can use the spikes or the wicks, doesn't matter how you call them, or the close price. Okay, the more spots you have, the more reliable it is. That's 2 notes I can give you how to work correct with support and resistances. Okay, because it really seems to be the most problematic thing for some traders. That's why we need to make it simple, not too close to each other, and the more spots. Okay, but remember the rule, friends. First of all, you spot the divergence. Only when you spotted the divergence, then you start drawing your lines. In our example, because the divergence started here, right? A hidden divergence started here. That's why I started to use this support. If my divergence were started only here, then I never would put these 2 lines here. That would be my first, that would be my second, and on the low it would be my third. Okay, remember that, it's very important. First of all, the divergence. Only then, and only then, you will start to put supports and resistances. And do not worry, we will see many examples. Okay, great. So that's our second step. When we find the convergence, we find the divergence on the same direction, then and only then we set 3 supports or resistances. Okay, then and only then. Okay, we want to see the prices stop around the support level and create a green candle. It doesn't have to be a candle pattern, it could be just green candle to hint on a potential bullish move to start. After the first bullish candle we have, we enter. Before I continue, do you have any questions, friends? Friends, please ask questions relevant for the things we learned. Okay, please. John, please email me private, okay? Email me private. Yes, Dave, that's the thing. You wait until you get a divergence on the same direction as your convergence, right? That's what I call the combination. That's what I call the combination. Okay? You find your bullish or bearish convergence. Then you go for lower time frame, and at the end of the correction, which we call sell the rally or buy the valley, at the end of the correction, you find the divergence on the same direction. And then, and only then, you set your supports and resistances. Alright, let's continue, friends. I can see some questions about candles and everything. Let's continue. Okay, so we can see more and more and more and more and more charts. That's the way to understand, to see much more charts. Less words written, more charts. Okay, so I skip these written things. Okay, and let's start to put everything together. Okay, this is an example from the PDF. Then we go for the charts to find examples, live examples there. Okay, step one, we find the convergence. What is this kind of convergences we have? What is this? Bearish or bullish? It's bearish or a bullish convergence? What do you think? Bearish. Wonderful. That's a bearish convergence, right? So what do I expect? The bearish trend to continue. What I'll be looking to do? I'll be looking to sell the rally. I find the convergence. I am waiting for a rally, and I'll be looking to sell that. This is pound dollar 4-hour chart. Okay, I'll go for 1-hour chart. Right? And I'm looking for the correction. The correction happened. Right? I go down. Let's go here. Skip just. Oh no, sorry, that's Australian dollar. Sorry, that's not correct. Okay, here we go. Okay, I go for the 1-hour chart, and I'm waiting for the correction. I'm waiting for the correction, and I'm looking for the divergence. I find my divergence. I find my divergence. Okay, I find my divergence, and then I set my 3 resistances. Why resistances? Because I'm looking to sell. So I have to find the resistances higher, right? I'm looking to sell. Okay. The first divergence, where it appeared, the first divergence here, right? Hidden bearish divergence. First divergence appeared here. Here is a hidden bearish divergence, correct? Here we go. So my first resistance is here. My second resistance is here. Okay, my third resistance is here. Okay, pay attention. They are not close to each other. They have distance. They have space. That's what I'm looking for. That's what I'm looking for. Okay. Now I do want to answer some questions before I continue. Do we have to wait until? That's a good question. Do we have to wait until the rally on the 4-hour chart is complete? You don't know where you do not know when the rally will end. How do we get ready for that? By divergences. Remember, once again, friends, what did we have here? Let's go one chart higher. That's a pound dollar. That's a pound dollar 4-hour chart. Okay, that's a pound dollar 4-hour chart. We have a bearish convergence. When exactly this correction will start, I don't know, and I don't care. I don't care. Okay, but when it happens, when I see it happens, okay, when I see it happens, I go for one lower time frame. In our case, the 1-hour chart. Right, here we go. Here we go. Okay, and I am looking for divergence to appear. When the divergence appear, it doesn't matter what kind of divergence. It could be hidden, it could be continuing, or it could be regular. It doesn't matter. Okay? In our case, that's where the correction started, right? That's where the correction started. And in this case, it created for us a hidden divergence. Let me show you this here. From here to here, there is a line. And from here to here, see that? That's my bearish hidden divergence. That's where it started. That's where I spotted this divergence. Would it continue higher? Would it not? I don't know. But what I do is, because I found, yes, sorry, the stochastic also, of course, the stochastic also, sorry. But what I found a divergence on the same direction. It's a bearish divergence. In this moment, I set my resistances. I set my resistances. This is number 1. I can see it here. Higher, I have number 2. Okay. And here I have number 3. I set 3 most closest and relevant resistances at my point. Okay, I find the convergence, then I go for lower time frame. I find the same time frame direction divergence. Okay, and I'm looking to sell this rally, and I set 3 resistances for it. How to enter exactly, we will see. Okay, that's the step how we spot our resistances and supports. Okay. Let me just reply a few questions here. No, Peter, that's a good question. Peter said it's a little bit confusing because on 4-hour charts we find a convergence, and then on lower time frame divergence is an opposite direction. No, they have to be on same direction. Remember what was the convergence we find? It was bearish. It was bearish convergence. Right? That's why I am looking for bearish divergences. Same direction. Here we go. Right? I went lower and I have my hidden bearish divergence. Same direction. Then I set my spots. My resistances. Okay, that's the thing here. David, is that okay right now with the resistances after I explain it? The key, Pana, you are okay. Pana, you are Pana, correct. The key is the divergence. The first thing is, once again, is the convergence. You find the convergence, right? Then you go for lower time frame and you find the divergence. That's the key. You find this divergence, set your resistances and supports. Then you are ready. Then you are ready. Okay? Then you are ready. Wonderful. When you have it, set the resistances or the supports. Let's answer other questions. How long do you wait for the correction? It doesn't matter. It could be immediate, fast, it could be annoying, long, doesn't matter. When there is a convergence, I don't know where it's going to stop, but when I see a divergence, Then I assume my correction is about to stop, and then I apply all other things, right? The divergence and the resistances. And yes, Miroslav, when the correction goes, then I look for the divergences. Yes. Okay. About the entrance, we will see very soon. And that's a wonderful question, Pillai. If the divergence on lower time frame is opposite to the convergence on higher time frame, should we ignore it? The answer is yes. Clearly yes. You only want to go on the same direction. That's why we use combination. That's a wonderful question. Okay? That's another great question from Dave. How many candle burns? How many candles burn I can call a correction? I don't know, and I don't believe it. It could be 2 big candles or it could be 20 small candles. It doesn't matter. Visually, you see the correction and you see the divergence. Okay? That's what you are looking for. That's what you are looking for. Okay? Yes, divergence direction is based on indicator. Yes. Okay. And in this case, it's a bearish hidden divergence, right? Bearish hidden divergence. That's why I assume it's going to continue bearish, right? It's going to continue bearish. Wonderful. So I can see we are okay here. Any more questions, friends, about these things before we continue? Peter asked, Vlad, is that correct? When we go to lower time frame, we want to see price going the same direction as convergence. In other words, yes, we want to find a divergence on the same direction as convergence. You know what? Let's make a test. That's a live chart. Okay, let's find here. Give me 1 minute. I want to find some. Convergence. Okay, give me 1 minute. Okay, take a look, friends. Let's make it simple. On one time we do it together, and you will understand everything. What is that? That's a down move, right? That's a down move. What do I have here? What do I have here? What is that? Bullish what? Bullish what? Bullish convergence. Wonderful. Bullish convergence. Fabulous. Okay. What is my next step? What is my next step? I'm going for lower time frame, and I look for correction, right? I wait for correction. Let's put the line where it started, okay? Where it started, and I look. Since this moment, I'm looking for correction. I'm going for 15 minutes chart. Okay, that's where I spotted the convergence, and I'm looking for the correction. Correction happened, right? We got this down move. And I have a question for you, friends. What do I have here now? What is this? What is this? Bullish, and the stochastic, of course. Bullish hidden divergence. Bullish hidden divergence. Fabulous. No, it's not regular. It's hidden. Right? It's hidden. Bullish hidden divergence. I have a combination. I have a combination. Yes. What do I do next? What do I do next? I set 3 supports. Wonderful. Wonderful. 3 supports. Okay, that's my area where I spot my my divergence. Right here, I spot my divergence. So I'm looking for three closest support. This is 1. This would be 2, right? This would be 3. Correct? Approximately it will be 1 pips higher, 1 pips lower. It's okay. We understand it, right? We understand it. The more spots, the better. That's my 3 supports. Done. Ready to trade. I'm ready to trade. Questions so far? Please don't ask about where I enter, where I set stop loss. Patience. We will see that. Questions about that? Pretty clear, isn't it? Pretty simple. Once you understand it 1, 2, 3 times, it becomes pretty clear, right? Questions about that? We will see much more examples, I promise. We will see much more examples. Any questions, friends? Here, that's where convergence appeared, right? Wonderful. Okay, so no questions here. We can continue. Correct? Divergence is what? Overlaying it? What? I'm not sure what do you mean? Miroslav? No. No. Divergence does not started before. The convergence started from here. That's our full convergence. Divergence started from this bottom. Before the end, yes, it doesn't matter. It could start from here or here, it doesn't matter. It doesn't matter. In other words, it's almost always when it's hidden divergence, it will start earlier because you are looking for the low, right? For convergence, this is your high. The high will be created from the low, right? It doesn't matter. It doesn't matter. Okay? Wonderful. No. You do not need to use the 4-hour charts. Why? You spot your convergence on the 1-hour chart. Why should you go for 4? You don't need to go for higher time frame. When you spot your convergence, then you go for lower time frame. Why to confuse? No. Okay? Friends, don't look to make complicated things. Why? No need. The rules are very simple. Don't look to make them complicated. No need. No, the convergence is on 1-hour chart. That's where we find it. Okay, we found the convergence on 1-hour chart. Then we went for 15-minute chart to find the combination with divergence. Okay, great. Let's see. Okay, friends, take a paper, please. Take a paper, please, and write down the time frame combinations. When you trade weekly, you go lower for daily. When you trade daily, you go lower for 4-hour. When you trade 4-hour, you go for 1-hour. When you trade 1-hour, you go down to 15 minutes. You skip the 30 minutes. And when you trade 15 minutes, you go as low as to 5 minutes. Okay. By the way, 15 and 5 sometimes is not enough. You will see that. That's better to use 5 with 30. 5 with 30. Okay. Even that 15 and 30 shows pretty much the same, still 5 and 30. Okay. That's what we have. Judy, we will make many practices then. Okay, we will make many practices later. Promise. Just want to go and cover all the things so we know all the rules. Then we go as many examples as we can. Okay, and I want to go for the charts right now, these days, and find trades for us. Okay, find trades for us. Victor says we'll speak about when. Oh, you mean what are the best hours to trade? At the end. At the end. Okay, at the end. Please remind me at the end. Okay. Are these Zoran asks? Are these all accurate? You even cannot imagine how much. But patience, friends, patience. I promise. Let's continue. Okay. So we find convergence. We go for lower time frame. We wait for correction. After correction, we find a divergence on the same direction. Then we set resistances or supports. And what are we doing then? Looking to enter a trade. Ready? Ready. Let's go. Okay. Here is an example. I think it should be just a second. Here we go. Yes. Okay, the same pound dollar that we talked about. Okay, we find a bearish convergence. We found our correction. We went lower. Okay, we went lower. We found our divergence, and we can go and make the attack. We can go and make the attack. Okay. Now pay attention, friends. I am looking for, if I'm looking for to sell, I am looking for a red candle on any of the resistances. It could be on resistance number 1, it could be on resistance number 2, or it could be on resistance number 3. I don't care. At the moment I have the red candle, I'm ready to sell. It doesn't have to be any pattern. Okay? Red candle is enough. Red candle is enough. Okay? So in our example, point 1, there is a stop and a red candle. We enter a sell. Pay attention, friends. I will mark it. Here we go. That's the first resistance. And here we got a red candle with the bearish divergence. Yes, even if the body is very small, I don't care. Bearish candle is enough. Yes, a closed red candle. How do you know if the candle is red or green? When it's closed, right? Then and only then you know if it's red or green. Correct? Great. So here I'm ready to sell. Then the prices went down and then up again. Let's say they did not go down, but they did move up. Then I have another red candle on the second resistance. That's my another sell. In this example, they never reached number 3. So my two only trades are number 1 and number 2 resistances. Okay? Please ignore this down move. Let's say there was no down move, but prices went straight from number 1 to number 2. Straight, okay? Just continued. I have a candle on number 1, I have a candle on number 2. Each of them is good sell. Is good sell. Okay? So as I said here, on point 1 there is a stop and a red candle, we enter a sell. At point 2 there is a stop and a red candle, we enter a sell. Point 3, prices never reach this level, no entry. Okay? Alright? Good. Now I want to reply some questions. Dave asks, is that after the, yes, you set your resistances after you have the divergence. As long as you have divergence, you have resistance. If you have the resistances, means you have the divergence. So you just look for your candle, right? Brenda asks, red candle on chart or indicator. You don't have candles on indicator? You mean red bar here? No, on the chart. On the chart. On the chart. The candle you are looking on the chart. Okay? Make it simple for yourself, friends. Indicators are to give you direction. Charts are to give you the entry. Okay? Charts are to give you the entry. And that's Pillai, another wonderful question. Do the prices have to go through the resistance? Yes or no? It's not must. They can be one or they can be few pips below that. That's okay. That it means that it reached the area. They can also make a false spike and then a down move. Okay, false spike and then a down move. Okay, that's also okay. They can spike through, they can stop on it, they can go even 1-2 pips below. It's okay. Good question. Right, let's continue, friends. Now let's stop and admit it is simple, right? It is simple. We find convergence, we're looking for correction, we go for lower time frame, we find a divergence on the same direction, we set 3 supports and resistances, and we're looking for candles stop on the resistances and supports with candle. When it happens, we are ready to go. That's what I call sell the rally. We find a bearish conditions, bearish market. Okay, then we look for a correction and sell opportunities. Okay. Miroslav, that's a wonderful question. Miroslav asked how long the opportunity correct, and Miroslav, please keep this question until I will come to the take profit, and then when I come to the take profit, ask this question again. Okay, then ask it again. Now, very important thing, how to set the stop loss. Okay, before the stop loss, there was a question. Can you use the Fibo levels for support resistances? Yes. I don't do it. I use support and resistances. You can do it. If you know how to do it correct, you can do it. That's okay. Okay? Set the stop loss. We have 2 options, friends, and I will explain you about each of them, advantage and disadvantage, and I'll tell you what I do. Earlier I explained that there were 2 ways to manage the trades, right? By entries. The thing for stop loss is simple. First way is to set the stop loss. The second way is to use exit plan. What do I mean? Okay, let's say I found a bullish convergence, then I went down for this chart, and I'm looking for bullish divergences. I find my divergences here. and of course the biggest one, which is hidden. Okay, which is hidden. Okay, so and then I set 3 supports: number 1, number 2, and number 3. 3 closest. Now how I'm looking to enter after a green candle, right? I'm looking for a stop on the support, and then after a green candle I am entering a trade. Now the first way to use the stop loss means to set a stop loss below the third support or above the third resistance. Okay, remember this number 3. Okay, that's what most important for. That's the final level for us to hold. So if I enter buy, I'm looking to set stop loss below support number 3. Okay, if I'm looking to sell, I'm looking to set a stop loss above resistance number 3. Above resistance number 3. Okay. Now, what are the advantages and the disadvantages? Let me find that's where I said that. Well, that's the important point. As we said, we can enter first support and second support and third support, right? As long as we have green candles there. If I enter 1 or 2 or 3 trades, my stop loss will be the same for all. If I attack each level, my stop loss will be the same for all. That will be below support number 3. So actually, in other words, if I enter at number 1, at support number 1, my stop loss will be the biggest, right? The biggest, the deepest. If I enter on support number 2 or 3, my stop loss will be lower. But what is the problem? The prices not always reach, say, support number 2 or 3. Not always. Okay? Not always. That's important. What is the disadvantage of using the stop loss? The disadvantage of using the stop loss is that sometimes it just spikes through the support number 3 and retraced immediately on your direction. That's the biggest disadvantage. But what is the advantage of using the stop loss? That you can leave your computer. You have your stop loss, you have your take profit, right? And of course you can leave and just let the trade work. That's the advantage and the disadvantage. There is another way to do to work with that, and I will explain soon. Okay, but that's how we set the stop loss. Okay, now let's another example. Example for sale this time. Okay, I found bearish convergence on a 4-hour chart, so we look for correction up and then we go lower for 1-hour chart to find the divergences, the bearish divergence, right? What do we have here, friends? Let's see, here we get our bearish divergence, right? Bearish divergence, hidden, bearish hidden divergence. Correct? Great. So I draw 3 lines. Resistance number 1, resistance number 2, resistance number 3. Okay? Number 1, number 2, number 3. And I'm looking for stop. Pay attention. Do I have a stop? Do I have a stop on resistance number 1? No. So there is no entry. Then the prices go through number 1 and go directly to number 2. Right? Go directly to number 2. Do I have a stop here? Yes. Here is my bearish candle. red candle. Okay, so I enter my sell. Where will be my stop loss? Above resistance number 3. Above resistance number 3. Okay, above resistance number 3. Okay, let's continue. Okay, Dave says not understanding my first sell. Which one, Dave? Here, this one? This is not a sell. I said no, no stop at the first resistance, no entry. There was no stop. See, there was no sell. The sell was only here on the second resistance. Okay, on the first there was no stop, there was no sell. Is that okay? No, why? No. Why? Here is the divergence. Pay attention what happened here. Is there a divergence already on this point? On this point, is there a divergence already? There is a divergence, right? You find your divergence. You are looking for stops. That's all. Okay? That's why I put the resistance number 1. Okay? Okay? Wonderful. The second. Okay. Okay, erase that. Well, let me reply for other questions. That's a good question. It seems like it is always a hidden divergence, right? That's what it seems. The answer is no. It's not always hidden divergence, but hidden is most popular. With the combination, it's most popular. You will see. You will see, but it's not always. No. You will see. We will see many continuing and regular. You will see that. You will see that. Okay. Victor says the word stop is confusing. Well, I separate it. I will say stop and I will say stop loss. Okay, stop and stop loss. I will use two different words. Okay, stop and stop loss. Stop means there is a stop on the resistance. That's what it means. Stop loss is where you set the stop loss. Okay. Above the amount of pips for the stop loss, though, we will discuss later. Okay, we'll discuss about it later. Great. Let's continue, friends. We discussed about the first way to set the stop loss, right? Now let's take a look on the second way, which is my favorite. Personally, my favorite. But I will explain what will be the difference. The second way means to attack the level supports and resistances, right? When you have a candle, but we do not set the stop loss. We do not set the stop loss. Instead of that, we have exit plan. We have exit plan, and we get out manually if and only if the third support or resistance is broken. The biggest advantage of that is even if there was a spike but the price is retraced, I will still be alive with my trades. The biggest disadvantage of it is that I have to be close to my computer. Close to my computer. Okay? That's the biggest disadvantage. And that's true. I agree with you. Myself, I trade only when I know I can manage my trades. That's how it is. When I know I can manage them. When I know I cannot manage them, I don't enter them. But that's me. Okay? Let's see the examples, friends. That's what I mean. Okay? Let's say we made our attacks. It doesn't matter right now where. Okay? But pay attention what's that. That's resistance number 3. It spiked and retraced. And I would win this trade. If I set a stop loss, I would lose. It's not always like that, but it could happen. That's why ignoring the stop is an advantage. Okay? That's all, friends. These are the two options to get out from a trade with a loss: by stop loss or by closing manually if prices break through third resistance or support. When I say break through, I mean they close above resistance number 3 or below support number 3. Okay? If it happens, then I know I get out. Okay. And now it is the time to learn how we actually make money and how we set take profits. We learned how we set stop loss. Now let's learn how we set take profit, and most important, what trades do we take, what trades we do not take. Okay? Now I have honest question, friends. Are you ready to continue or you need a break? I think we're ready to continue, right? I think we're ready to continue. We don't need a break, correct? Or you feel like you do need? How do you feel? Pana always need a break, I know. Continue, right? Wonderful. Okay, so let's continue. Let's continue. Only two want a break, so let's continue, friends. Okay, please. It's important to. We are on a good momentum right now. Okay, so let's push. Let's push. Okay, so how do we set profit? That's the most important thing, isn't it? We all want to make profits. Before we start, once again, you see how important it is to remember and to understand all the steps. Okay, and in the PDF and the book, I just write it down a few times for you, friends, so you understand the importance of that. We find a convergence, we look for correction, we go for lower time frame, we look for divergence to the same direction as the convergence, then we set 3 supports and resistances, then we attack the levels if we get a relevant candle, we set a stop loss or an exit plan, and now we set a take profit and we let the trade work. Okay, that's our step by step setting a trade. Let's continue. There are 2 ways to set take profit. There were 2 ways to set stop loss, so it has to be 2 ways to set take profit, right? That's the rules. There is a way, as I call, for more beginners, and there is a way for advanced traders. For advanced take profit, you will just need to understand the divergences. We discussed about that earlier, right? Now pay attention. Let's start with the simplest way for the beginners. Okay. For this way, we set the target at the last low of the convergence. What do I mean? Take a look, friends. That's a bearish convergence, correct? That's a bearish convergence. Now I go for lower time frame. I find a bearish divergence. Okay, here we go. I find my bearish divergence at the end of correction, right? At the end of correction, and I'm looking to enter. I'm looking to enter. That's where I make my entry, right? Where I find my red candle. Then I go back for the higher time frame, and pay attention, friend. That was my low of the convergence, right? That was my low of the convergence. Here we go. Here, right? That's my low of the convergence, correct? Here we go. That's correct. So that would be my target. The end of the convergence. The end of the convergence. Okay, that would be my target. Okay, very simple. The first way is extremely simple. Okay, I know it's simple. That's why I will not add other things. Just true in its simplicity. I will keep it as simple as possible. You set your profit at the end of convergence, on the last low or the last high. Okay? Now let's go directly to the second way to set take profit. That's little bit more tricky, but it's not very complicated. Very simple actually also. Let's take a look. That's our entry area, correct? That's what we saw in the previous example. That's our entry area. I can hold my trade all the way until I get opposite divergence against me. You see what I do here? I entered here, right? And pay attention to what's going on, friends. It's moving down and I'm getting out when I have the opposite divergence against me. You see this divergence, right? That's what I get out after I have this candle on the same time frame. Okay, on the same time frame. Okay. Again, I entered a trade on lower time frame and I hold it all the way until I get a divergence on the same time frame as the convergence war. As the convergence war was. Why war? Was. As the convergence was. That's why it makes it a little bit complicated. You see how I play with the time frames? You see, I move from higher to lower, then back to higher to look for the opposite way. Why this is more advanced? Because from one point of view, you can earn more. You can earn more pips, right? Sometimes the trade will not stop here, it will push strong down and you can earn big move. Okay, all the way until you get a divergence against you. But it is more advanced. You have to be much more live with your trade. You have to follow it. You have to watch what's going on. That's why it's advanced. You actually manage your trade. You don't just set and forget. You manage your trade. Okay, you manage your trade. That's something I don't do. That's something I don't do. I love to take my profits earlier. I like to take my profits earlier. That's an advanced, but I do not do it. I will tell you one thing, friends. When you trade two or three trades together, it's very complicated to follow them and follow the divergences against. Very complicated. I don't do it. I set my take profit as we learned on the previous way, and I just do it this way. This is more advanced. Okay, and that's a wonderful question. How do I know this is the end of divergence? At the moment the MACD changed its direction up, and I get a candle, an opposite candle, in this case a green candle, that's my get out. Okay, that's my get out. The Bollinger Band is something we do not need to use with these strategies, sell the valleys or buy the valleys. If it helps you with technical things, you can do it. Personally, I do not. That's all. For these strategies, okay, for sell the rallies or buy the valleys, you can, I don't. Okay, wonderful. As we said, friends, the biggest advantage it is because you can earn much more, but the biggest disadvantage is that you have to be close to your computer. You have to manage your trades, right? Okay. Okay, that's what we discussed. That's just another example. Okay, just another examples how I get out with opposite divergence. Okay, once again I make my sell and I'm waiting and waiting. I will not close here, see? I'm waiting until I get my divergence against me. When I get out the first candle. Okay, okay. Okay, any questions so far, friends, before we go for extras? Before we go for extras. Extras will be my tips, my small tips which will help you. Which will help you. Any questions before that? Okay, I can see no question. So friends, let's do it this way. We are coming now for the last part, extras and examples. So let's do it this way. Take a break 8 minutes from now, okay, and we will continue through the extras and we go for charts, and at the end we will build plans for this week. Okay, so 8 minutes from now we continue for our last part. We're taking a small break, and please come fresh and ready for the last part to go. Bye bye. We are now on the last part. Okay, we're going for extras, then we will see charts, and I have 4 things ready to go for the upcoming week. The only thing I do want to say before I continue is convergences and sell the rally, buy the volley could be applied everywhere. Forex, stocks, commodities, whatever you want. Okay? Whatever you want. It's important. Great. So let's go and see. We have now my extras. Look for a convergence after a divergence. What do I mean? The best way to confirm that the convergence is not an empty move but a real move, right, is to make sure that the convergence comes right after a divergence. Okay, this is a bullish hidden I confused the words already. Oh, sorry. This is a bullish convergence, but it comes right after a bullish divergence. You see that? That's what makes me think that this bullish convergence is reliable, and after correction the move most likely will continue higher. Okay, so make sure that the convergence comes after a divergence. Okay, that's like a very interesting and important extra. Okay, personally, only combination with divergence and convergence. Only. Okay.
Alright, as I say here, friends, most of the times it will happen anyway. The convergence will come after divergence, most of the time. Sometimes you will see a convergence without divergence before it, and that's a weakness sign. Okay? But I need to say, I must admit that this situation is extremely rare. It will not happen often, that's for sure. It happens very rare, but still, I do want you to be aware of that. Okay? The second extra is use trend lines when they appear there to help. Okay? Pay attention, friends. We find a bullish convergence. This is pound for 4-hour charts. We go lower, right? We go lower to find an entry. Pay attention what I have here. What is that, friends? That's a bullish trend line. It is here to help. Right? I have my divergence on this small part, continuing divergence on the small part. I have it on a support. I have it on the trend line. Fabulous. Use these trend lines. They help a lot. I do not say ignore a trade if it's not coming to trend line, but when it's there, it's a wonderful sign. Wonderful sign. Okay? By the way, just between us, when there is a trend line, right, like here, and a support, what you can do, you can even not set your you can even not set your stop loss below the third support, but below the trend line and the last low. That's important. Okay, like here. When it's a trend line meeting with support, you can even not set your stop loss far. That's like between us. Okay, wonderful. Third extra is longer time frame. My recommendation is to trade higher time frames. That's what you asked, guys, some of you, at the very beginning of this meeting. Okay, what time frames are most reliable? I can tell that, and I trade it everywhere. Seriously, I trade it sometimes even when I'm bored. I trade even on 5 minutes, combination of 15 and 5, 30 and 5. I do it. I do it rare, not always, but most of my trades are on longer time frames, for daily and weekly. Yes, the higher the time frame, the less trades we will have, but they are more powerful. On 4-hour time frame and daily, it's extremely reliable. And please do not believe me. Please take all you have here, go to the chart. When you finish, go to the chart and you will see. Don't believe me? Just go and check that. Go and check that. You will see. You will be amazed. I promise you. You have my word here. You'll be amazed. The stop loss is bigger on a higher time frame. True, but we will discuss about that in a minute when we come to money management. Okay? Good. There is a question from Jose. Isn't it easy to crossover? No. I don't believe on moving average cross, because on many times you will miss most of the move, big part of the move. I believe the candles. I believe the levels. I believe the candles. Anyway, that's what I do. Okay. The fourth extra is watch for moves. It could be confusing sometimes how to correctly identify lows or highs. For that, I have a simple rule. A low or a high must be created after a clear move. If you have a doubt if there was a move or not, it is not a move. I said it earlier, I said it again now. Let me show you the example. Okay? That's clear move, right? That's clear move. This low created after a move, this low created after a move. It's clear move, clear bearish convergence. Okay? What's wrong? That's wrong. This is wrong, friends. What you see here, it's wrong. You see that? That's not moves. That's not moves. Okay? It's very, 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 very rangy situation here and here as well. It seems like convergence. It is not. Okay? When there is a doubt or you're not sure, ignore. It is not. Okay? Fifth extra is risk reward. Do not enter any trade. Okay? If your take profit is less than 1 to 2, then your stop loss. We will see more examples. Just an extra. The risk reward for sell the rally or buy the rally must be at least 1 to 2. At least. Do not take every trade. If the take profit is less than 2 times than the stop loss, skip the trade. Okay? Or look to improve it. I will explain. Look to improve it. If prices will go in your direction, then you can jump in. I will show examples. 6 extra will be if you enter a trade and you got opposite divergence before your target reached, close the trade manually. Okay? Close the trade manually. I will show an example. I will show an example. Okay? Miroslav asks, great. How long is the opportunity correct? I mean, how do you know if you should look for entries or not? As long as your potential take profit, after the correction was not reached, okay, as long as your potential profit after a correction was not reached, that's a potential, that's your opportunity is alive. You should look for sell the rally as long as your potential take profit was not reached. Okay, that's how you know if it's if your opportunity is still alive or not. Okay. Yes, or when the opposite divergence appears. Yes, that's I thought it's pretty clear, but yes, or when you have opposite divergence. Exactly. All right, now I feel, friends, that you are ready, and it's time to summarize from A to Z and show examples of full trades, and then we go to the charts and find live trades for upcoming week. Example number 1, we find a convergence. What is this convergence? Bullish or bearish? You become lazy, friends. You become lazy. It happens every time, all the time. At the beginning of the meeting, everyone writes bearish. At the end, people write BE, BEA. Just shortcuts. You are lazy. It's a bearish convergence. It's a bearish convergence. Okay? BC, yeah, bearish convergence. Wonderful. But bullish convergence is also BC, so careful. Just kidding. What should we do right now? This is gold, by the way, 4-hour charts. right? We go for 1 hour chart. We look for correction, right? And what do we have here? After this correction, what do we have? Wonderful. Hidden bearish divergence. Correct? Wonderful. Hidden bearish divergence. What should I do right here? What should I do right here? Set resistances. Fabulous. Wonderful. Set resistances. Correct? How much? 3. Dave asked good question. Do I wait a correction on the 4 hour chart or like 1 hour? It doesn't matter. It will be the same correction. It doesn't matter. It will be the same correction. You will see the same thing. It really doesn't matter. Okay. So I set resistances. Here we go. This is resistance number 1. Right? This is resistance number 2. And this will be my number 3. 3 closest relevant. And let's see. I have the move and my divergence is spotted here, right? I could enter here with this red candle very close to the first resistance, right? Right here. My divergence already spotted, correct? But the question is, do I have a good risk reward? Okay? And the answer is, pay attention friends, if I enter here, my stop loss is like that, and my potential profit is like that. Is that good risk reward? Nah. It's bad risk reward. Right? This is wrong. Okay? This is wrong. If prices push higher and I have another divergence on another level, then I will be looking to enter. Right? And here we go. That's my second entry. My second potential entry. Right? Correct? My divergence just continued a little bit higher. My hidden divergence is still here. Right? I'm looking to enter here. Okay? And let's see. We see that we have bearish candles on first resistance and second resistance as well. Our target is the last low of the convergence on the high time frame, right? That's our target. That's our target. Now pay attention on the first entry, the first resistance. The risk reward is bad, as we discussed. On second entry, also, right? If I enter here and my stop loss is here and my take profit is here, I have 1-to-1. 1-to-1 is not good enough. What do? I skip the trade. I skip the trade. Right? But what could I do still? What could I do still? I could improve my entry. What do I mean? What do I mean, friends? That should be my entry here at the end of the red candle, right? But I found that the risk reward is bad. If the prices would push a little bit back and come here, right after the candle, then that would be my stop loss and that would be my take profit. Then it would be 1-to-2. You understand what I mean, friends? This is what I call improve your entry, and this is your good risk reward. Don't worry, we will see more examples. Okay, we will see more examples. Just wanted to show you this. Okay, so with the divergence we skipped the trade. Okay, the risk reward was not good. Small tip from me: patience paid off. Do not feel bad if you miss a trade. Don't feel bad. You will find a lot of opportunities, trust me. Okay, after a few more candles on the same convergence, that's what we got, friends. That's what we got. Okay, that's what we got. You see that? A deeper, here we were looking to attack here, remember? That's what we were looking for, correct? But we said our risk reward is bad. But then the prices went little bit lower even. My convergence on higher time frame continues. You see? My convergence on higher time frame continues, and then bam, another correction, deeper correction. You see what I mean? And your passion and our patience here paid off. In this case, just let's erase the lines. In this case, okay, I got another move, and here, after this move, I got another hidden divergence, plus I have now continuing divergence on this part. You see? What do I do here? I draw resistances. This is my first resistance, correct? That's the area where I spotted it. This is my second resistance, and this is my third. I have my candle, right? I have my candle. And what about the risk reward? What about the risk reward? Let's continue. Here we go. Is that good enough or not? Well, yes. That's the trade I will take. That's the trade I will take. Remember, friends, at least 1 to 2. Many times you will get 1 to 3 or even more. Many times. At least 1 to 2. Okay? That's our first trade we do together. We do full trade. Let's take a look at another one. This is pound against the Australian. We find a bearish convergence, correct? What do we do now? We go for lower time frame, we look for correction. We have a correction, right? We can go for lower time frame. And here is our lower time frame. Here is the correction. Here is my correction. Right? I can see I have wonderful hidden divergence. I can see I have wonderful hidden divergence, right? Plus I have a trend line. How powerful is that? How powerful is that? I have a trend line. Remember what we discussed? That's very powerful. Right? Let's continue. I set 3 resistances right now. This is the area I spotted the divergence, right? Number 1, number 2, number 3. Okay? I'm looking for entries. I have a candle. Is that a good risk reward or not? Let's take a look. If I enter here on the first candle, I have 1 to 1. Good enough? No. No. So what I do? I skip the first entry. And if the prices will push higher, then I will be looking to rejoin. Well, not to rejoin, but to enter. Okay? Then I'm looking to enter. Because on this case, it's bad risk reward. I'm looking to improve it. And friends, patience paid off. Do not feel bad if you miss an entry. if that's a bad risk reward, skip it. Skip it. Okay. Now let's continue. Okay. The price is pushed higher, and we got our bearish divergence. Okay, here. Correct. We got our bearish divergence here. We got a bearish candle pattern, a big one. You see that? But after this big candle, the risk reward is still not so good. Still not so good. So what can I do? What can I do? I can improve my risk reward. Remember what we discussed about that? I can improve my risk reward. How? If prices push little bit back, and prices did push back, and in this case, my target is much bigger. My risk reward is wonderful here. Agree with me? My risk reward here is fabulous. Okay, but now for most important thing. Remember what we discussed, friends? We set the take profit, right, and we let it go. But if there is a opposite divergence against me before my target reached, what should I do? Get out. Right? I go out. Okay? And here what I mean. The prices did go down, almost reached our profit, but we got a bullish divergence against us. Bullish divergence against us. And we got this green candle with the divergence. And MACD, you see the MACD? Turned up, turned bullish, bullish slope. That's get out sign. That's get out sign. And Zoran is correct. He says we also have, not just that, we also have a bullish hidden divergence, right? This. And the answer is correct. See? So it's double divergence against us. Friends, don't fight. Okay? Don't fight. If you want to give the trade a chance, at least move your stop loss to break even. At least move your stop loss to break even. If you don't want to close it and you still don't, still want to give it a chance, okay, but break even your stop loss. Okay? Do not lose on trades that almost reached the take profit but missed few pips. Do not lose these trades. Protect at least with break even. Protect at least with break even. Okay? After a good move, after a good down move, and just a little bit before the target reached, a bullish divergence was created against us. In these situations, we never fight the market. That's what I do. When it happens and a bullish candle appears, get out. Respect the market if you want it to respect you back. Okay? And if you try to take more than the market is ready to give, you can stay with nothing. Okay? Now, friends, it's time to go to charts. Any questions before we do that? Any questions before we do that? Okay, so I have 4 on my list. New Zealandian dollar, OZN, Walmart, and Verizon. 2 stocks, 2 pairs. Okay, let's go and let's see. This is New Zealand dollar. Now, I do want to ask you, it seems like we have here a bearish convergence, correct? A bearish convergence. I do want to ask you, is that a low? That's kind of controversial. Kind of controversial. Is that a low? Well, pay attention. First of all, did we have a move here or not? Is that a move or not? It is a move. The problem is it's sideways. Sideways is always also a move, right? Sideways is also a move. This is definitely not classical situation. It's definitely not classical situation. But because we have, and I go here a little bit more advanced, so please follow me. Please follow me. Previous low, this one? You mean? Earlier, this one? Here? This one? But you're comparing after the last low before the last high. This low before was before this high. Then you get a stop and then you get another high. Correct? That's going too deep. What I do here is I'm taking a look on the general picture. It comes after a bearish divergence. Correct? It comes after bearish divergence. So I have my bearish pressure. Right? It's definitely not the classical situation. But the bearish pressure here is clear. And yes, this is a sideways move. But it is a sideways move, not of 2 or 3 candles. It's a sideways move. It's kind of a flag even. Oh, sorry. It's even kind of a flag. Just a second. Here we go. Right? It's kind of a flag here. After first up move, then we get this bullish flag, and then another push up. That's why we can treat it as, I want to erase the lines, okay? We can treat it as a move, sideways, but a move. Once again, comparing the whole picture, okay? And we can say we have a bearish pressure here. Therefore, we are looking now for bullish correction. This is a 1 hour chart. We will go then for 15-minute charts. We can mark ourselves a trend line. And if prices push higher, we should be looking for sell opportunities. I will ask you that. Can we look for sell opportunities right now? Do we have hidden divergence? Do we have hidden divergence? Or any other divergence? No. Correct? We don't have nothing. We don't have anything here, right? So we cannot sell now. But we can give the price to push higher, and if they do, we can then follow for our divergences. And when they are ready, we will set our resistances. Okay? I just set resistances. Just hold on. Here we go. Just to show. Okay, just to show. It seems even too close. These two. This is the one. This is the first I will be looking for. I don't want them to be too close. Okay, here we go. And if prices push there, that's our time to look for this bearish divergence to appear and look for our sell opportunities. But what should we remember, friends? What should we remember? Risk, reward. If we will get our sell here, our stop loss would be above the third resistance and our profit would be the last low. It's kind of one-to-one. Is that good? No. So what do we want to see for New Zealand dollar? We want to see the prices pushing higher, somewhere around the second resistance here, right? The trend line and the second resistance. That's where we want it to go. If they go there, that could be fabulous sell opportunity. From here, we can look for sales like 15, 20 pips stop loss and 40 pips profit. There we will get our risk reward. Okay? The New Zealand dollar is the first one to watch. To watch. There is nothing clear happened yet. That's to watch at the beginning of the week. At the beginning of the week. I will pana at the end, okay? The next one I have is Aussie against the Japanese yen. Let's take a look. 1 hour chart. Okay, 1 hour chart. We have had a move here up, right? Again, sideways move before the last highs, sideways move, and that's the low created during the sideways move. Same story. See that? Here we go. It comes after. It comes after a bearish divergence. Now the bearish pressure here is clear. The bearish pressure here is clear, right? Now a push up would be considered as sell opportunity, right? We go. This is 1 hour chart, so we go for 15-minute charts. Correct, wonderful. We go for 15-minute chart, and we are looking for sell opportunities. That would be our target, of course, the last low, right? We do we have right now any sell opportunities? Well, we have here a hidden divergence, right? We have a hidden divergence here, but is that a good entry, friends? Is that a good entry? Well, we can understand it is not, right? If I set resistances, this is number 1, this will be number 2 approximately, this will be number 3. My stop loss will be much bigger than the profit. So is this a good entry right now? No. Where it will be good entry? If prices push higher. Then I will reset my resistances and will look there for the risk reward to be correct. Okay? For the risk reward to be correct. Any questions so far about these two things we just discussed? I have 2 more on my list, Walmart and Verizon, 2 stocks. Any questions so far? Okay. This one, that's a 200 moving average. It's nothing to do with what we are doing. That's just my regular template, so nothing to do with that. All right, let's continue. Walmart will be our next one. Also, 1 hour chart. Here we go, friends. That's pretty clear bearish convergence, isn't it? Isn't it? It's wonderful bearish convergence after a bearish divergence, of course. Great. We go for 15-minute charts. Do we have anything? We have a bearish divergence already hidden. Correct? We have a bearish hidden divergence already. It just happened close to the end of Friday. That's why we get a sideway, right? But we have it already. So can we go and attack? Let's compare risk reward. I set resistances. Number 1, number 2, this is too close, number 3. If I attack here, my stop is around 80 points. My potential profit is much more, right? 180. Is that good trade or not? The answer is clearly yes. That's the trades I trade. Okay? That's about Walmart. Verizon, VZ. Let's take a look. Okay, 4-hour chart. Do we have a bearish convergence? Yes, we do, right? After this bearish divergence, bearish convergence, right? Very strong, even with the indicators, very strong. I do want it to push higher to find my entries. I go for the 1-hour chart. Do I have any divergence here on the 1-hour chart right now? No, it's not flat. It's not flat. It's a convergence. It's not flat. But do I have any divergence right now? No. But what can I assume? If it pushes higher, I can look that there is a potential hidden divergence to create it like here, right? If it pushed to this area, here it can create a wonderful, let's put circle, here it can create a wonderful hidden divergence, right? Wonderful hidden divergence. And that's what I'll be looking for. I will so the last line was terrible. I will set the resistances already, just to be ready. 1, 2, and of course the last high 3, right? Of course, last high 3. By the way, 2 could be here on the gap close. I can understand that if it reached the first point, my risk reward would be terrible, and I will not trade this. But if it comes to the second area, to the gap close, and creates a divergence there, then my risk reward would be wonderful. Could be 1 to 3. Could be 1 to 3 there. Okay? And that's what I am looking to do. Unfortunately, these are the as for now, the best things I found. Normally we have much more, but it's weekend, so pretty much that's why. There was some request to take a look on the euro dollar and the euro yen. Euro dollar, 1-hour chart. Okay. We had the up move, yes. So but I'm not sure what you ask here. You did the last 2 lows. but it's not a. Oh, no. That's a good question. You know what? That's a good question. You were on an uptrend, right? It made a down move now, but this down move created completely new low compared to what you have had. You know what I mean? Or I not understand. I not understand what you mean. You cannot look to buy here. It's nothing to do with the buys. No, but you cannot look to buy here. The question about to buy or to sell, I'm not sure I understand. Oh, to sell the rallies. Yes. Very tricky, very rare situation. But yes, it's I don't trade these things. Personally, I do not trade these things. If you take the last two lows, that's a bearish convergence after this bullish move. Yes, it is. Yes, it is. It's too ugly. That's not the situation I trade. Technically, it's correct. Technically, it is correct. That's not the convergences I trade. That's not the convergence I trade. But technically it's correct. Wow, very tricky, so well done for the spot. But wonderful, but that's not a trade I trade. Friends, do you understand this example? We have had a kind of an up move, right? Lower, that was a clear trend line, bullish trend line, so it is an up move, right? With waves, and then bam, breakdown that created lower lows. Technically it is a bearish convergence. Is that good to trade? That's a different story. That's a different story. And the answer is no. Okay? Good. There was a question about Euro Yen as well, right? Euro Yen. Euro Yen. I don't see any convergence here. I don't see any convergence here. No. No. Okay. Victor asked about what are the most recommended hours to trade. Intraday. For intraday, trade the European and New York session. Mainly the open hours and the close hours. European and New York session, the open and the close hours. The first 1.5, 2 hours, and the last 1.5, 2 hours. For longer time frame, 4 and daily, it doesn't matter. You can trade whenever you have your chance. It doesn't matter. Welcome. Ashlaf asks, one day, daily, it's a bullish divergence. It's not a convergence. It is creating a bullish divergence here, not a convergence. No. And if the question was about that, so we even didn't have here higher high, so it is not. No, it's not a convergence. Okay. Almisor, answer is yes. I will update later how. Any more questions, friends? Any more questions? Okay, now I do need your help. There is a link. That's the link, first of all. If you can, please write it down. If you can, please write it down. Even though we also will send emails later, but still, please write it down. Okay, it's http programnightmare.questionform.com public live marathon. Please write it down. And I would like to ask you, friends, that's a question form we prepared. This was the first ever live marathon I did. I thought that it's a good idea to have a one-day concentrated marathon from the very A to the very Z, covering all the things, explaining all step by step, building its very clear picture for sell the rallies, buy the valleys. And I would like to ask you if you could go and to this link, okay, and answer these questions. It's completely anonymous, okay, you don't have to put names there. So please, friends, your opinion is very important. Please find a time and fill that, please. It's very, very, very important. I do want to know what should we do, how we should do in order to improve it and make it the best. Okay, Zoran, I'm not sure I understand what you mean, my friend. How to classify this method from other? What do you mean? Oh, you mean if I think it's more reliable or not? When it comes to divergences, from my point of view, they all the same reliability. The thing is what you do is that this method, from my point of view, could be easier than others. But that's what I think. That's what I think. I might be wrong. For some it could be much easier, for some it could be more complicated, and that's okay. I find it easier. I might be mistaken here, but the reliability is the same. When it comes to divergences, it's all the same. This is the divergence, convergence are the same, and this is the most reliable tool we have of the technical world. Okay, so once again, friends, please, if find a time, fill this this question form. Okay, we will also send emails, but still, if you could copy that. Okay. Yes, Ramon, and I will update about it, Ramon. Okay. Just between us, friends, I would like to ask: did you find it useful? Did you enjoy? Do you have still questions? Do you understand all the things we talked about? Everything is crystal clear. All right. Okay, that's wonderful. If so, that's wonderful. Yes, I know. Sometimes something could be confusing. It's many information. I know. Now need time to cover it all. I know it takes time. Yes, I will update. I will update, of course. Yes. Okay. All right, friends. I appreciate a lot. Your time. So I'm sorry for taking your Saturday and your hours with families. It was important to me to find the time where we all could kind of be there together. I enjoyed very much, but you know it's not a function, because I love doing that. I love very much doing that, and I enjoy share what I do and how I do, and I'm so, by the way, how was my English? Too terrible or okay? Too terrible or okay? It was okay. Not so terrible, right? All right, wonderful, great. Class A or Class B or Class C? Class A, B, or C? Ah, just kidding, just kidding. That's a good one, Dave. I will give my wife her mouse back. I promise. I promise. I promise. She saved me, so I have to do it. Friends, once again, thank you very much for being here. I enjoyed a lot, and please do not hesitate. If you have any question, you know how to reach me. You have my email, you have my Skype. You know how to reach me. If you have any question about examples and everything, I'm here. Don't hesitate. Maybe sometimes I don't reply an email within an hour, but after a day, ask. Ask. Don't keep for yourself. Don't keep for yourself. Please. Okay? Ask. Send me screenshots. Ask the questions. Let's do it together. About the recording, I will update. Okay? How and when and why and etc. etc. I will update. Okay? Of course, Pana. Of course. Of course. Friends, thank you very much. Enjoy your the rest of the day, or good night for our Australian friends. Dov, it was a big pleasure to see you here. Welcome back. Welcome back. Ciao, friends. Have a wonderful week.